Well, hello again, everyone, and welcome to the Options Mentor. Well, this week didn't disappoint either, with lots of market movement. Finally, the market slowing down a little bit and maybe taking some note of the fact that interest rates have risen and may rise more in the future. A lot of times the market likes to ignore that, but it did take note of it this week, and we can see that the SPX has been down a little up until today, where it's trying to stabilize itself. But let's take a look at a chart and just see where we've been here as I share my screen. And we can see that the SPX has kind of stopped itself up around 4,600. So just kind of roughly speaking, we've got this little bit of a range going between 4,500, 4,600. Yeah, beyond that, maybe 4,620, 4,650, maybe 4,450 if we could get through 4,500 or 4,600 and sustain it. So we do have a bit of a range here. I think it's a really good time for range trades. Let's go over and look at the VIX real quick. The VIX also finally perked back up a little bit, but it's still in the lower part of the range. Look here, this is the last year. And you can see we're still well ensconced in the lower part of the trading range. So let's go back over here to SPX and let's talk about a trade we might look at on Monday. Now, of course, this is assuming that the VIX is still roughly around where it is, under 20, that type of thing. We haven't had some 100-point gap or opening or something. So if we go into Monday fairly normally, then I would be looking to do the all put flat fly. Now, I've mentioned that earlier on some earlier videos on here. I haven't really covered it as much lately. We've been doing a lot of long Vega trades like calendars and diagonals, which those are fine too. But I really think with the spike up in volatility, even though today the VIX came down a little bit, just over 1, we're still in a good range for the all put flat fly. And while it may be short Vega in a relatively low volatility environment, really, this trade's going to make its money off of theta, and it's going to give you a good range to trade in and easily repair the trade if you need to. So if we look here, what I did is I set this trade up pretty traditional for how I do an all put flat fly, which is 35 days or more out, which in this case, we are out at September 8th. We are not September 8th. I'm sorry. I went to September the 15th. Because on Monday, it would no longer be 35 days, something on the 8th. So if we go here on Monday, we will be, I guess, about 36 days out or so on Monday. This trade will look good. So that's how I pick that. And then I usually center it a little below over trading, 5, 10 points, maybe a little more sometimes. But here we are at 45.33. I centered it at 45.30. I go up 60 for the top, up to 45.90, and then down 70 for the bottom strike, which is 44.60. Now, if we come into Monday, give the market a chance to open and see how it's behaving, and if we haven't had crazy moves, then you could consider putting this trade on if it works for you and it's right for you and you understand it. So let's just take different scenarios. You might not be using these strikes specifically, right? What if we were trading around 45.50? on Monday when you decided to put this on? Well, then I'd probably center it at 45.40, up 60, 4,600, down 70 from 45.40 would be the 70, right? 44.70. So wherever you're at, center it a little below that. And from that center, go up 60 and down 70. I'm going to look to get 10% profit on this. That's 10% of the cost of the trade, which is the debit, which is around 5.25 at the moment, plus the margin, which is $980. So we're at about a $1,500 trade, be looking for roughly $150, $160 per contract profit, and then get out of this thing. I would expect you could be in this trade 8 to 10 days. It could be more. Don't be surprised if you're in it 2 weeks and haven't gotten, your profit yet. It's okay, particularly if you adjust it. But you should most of the time be out of these in 8 to 10 days as the theta comes in. I still do like long Vega trades if you're looking to do those calendars, long diagonals, that type of thing. But I think this is the fly I'd want. I wouldn't want to do shorter term flies, things like 18, 20 days out right now, because I'm afraid we're in too ripe of a position for a lot of movement in the market, possibly to the downside even, It is August. August is often volatile along with September. Towards the end of August, usually you can get some really crazy moves because the volume gets lower and lower as everybody's on vacation. September comes, people come back. Sometimes that can cause a little volatility also. But so this is a trade you can trade normally. Just, be aware that you could see some pretty profound moves on very little news at times just because the volume's low. Well, I hope you found this helpful. As always, I encourage you to like the videos, subscribe to my channel, tell everyone you know to subscribe to my channel. It is growing, which is great, trying to get more and more things on here. And I will be back with you next week. We'll be looking at another trade and what the market is telling us then. Have a great weekend, everyone. Bye-bye.